Hey everyone, Dan Peterson here with the Peterson Partners team at Berkshire Hathaway. I am here live with Jeff Abel with Fairway Mortgage, and we're just doing our weekly mortgage update. So welcome, Jeff. How are you doing?
Thank you, Dan. Everything's going great. It's good to be here.
Well, good. Looks like you're still sheltering in place, which is good for you.
Trying to do my part.
Yeah. So tell us what's happened this past week in the mortgage industry.
So it's been a little bit more the same since last you and I talked. The folks behind the curtains are just trying to figure out how things have changed, keeping products available as much as possible. That center core of products is still unchanged. Some things that you may see or have your clients may see as we see get home buyers in is there's a little bit of tightening credit standards. Those are done case by case, lender by lender, I should say, as everyone tries to make sure that these mortgage-backed securities are still attractive and sellable to keep rates low. So that's one of the biggest things that we've gotten the message on is just credit quality is getting a little bit tighter look. I think everyone's seen the unemployment numbers that have been historically high. So the other thing worth mentioning is just employment. They're doing additional checks even on the day of closing to make sure that folks are still actually employed. So that's a big one. Other than those two, we're finding that the market's plugging along. But again, it's a little day by day, so it's always good, as I'm telling people, just the you and I in the business is the person to be keeping in touch with right now.
Yeah. I know a week or 2 weeks ago, it was kind of very volatile, I guess, in the mortgage. Has it pretty much kind of settled down at this point right now?
Yeah, I don't know how to eloquently kind of describe it. It's still the volatility is still there. What's different today is we know it's volatile. So it's kind of that expectation of, okay, today's just another day of figuring things out. I think there's a lot more calm in the market, at least on our end, as loan originators, lenders who understand that there's just kind of a new normal out there. And so I feel like that piece, at least, the volatility is there, like I said, but that's what we expect. So
Yeah.
there's a little more calm.
Yeah. Are you still seeing applications come in?
Yeah, we've been really busy. As I was talking with Sue a moment ago, I know you guys are staying hopping. Lots of activity. It's a pretty good balance right now on my side from a lot of refinance inquiries still coming in, a lot of pre-approved customers that are asking great questions. Is my pre-approval still valid? So the business level has been really encouraging.
Yeah. And that's what we're seeing on our side. People may not be ready to, and actually we are seeing people that are writing contracts today because they do need to be in a place. Um, but we're also seeing people who are thinking about, you know what, it might be a month, 2 months, 3 months down the road before I want to buy, but they're getting things in place now in order to really capitalize on when we get over the COVID hump and things get back to normal. So there's still a good amount of activity out there of people just getting ready to come on the market. Now,
Agreed.
I've heard in the news that there's a forbearance plans that are available for homeowners. What exactly is that?
Yeah, so that's a topic that we're getting a lot of information and education on. So the Consumer Finance Protection Bureau that kind of oversees our industry and homeownership in general has started to create some rules around how to help homeowners that are affected by the really the employment crisis that's being caused by the virus and the shutdowns and a lot of the mandatory closures that we're seeing. So, it's going to affect a lot of people. So they have encouraged all the lenders, servicers, the folks that are collecting your payment, for example, that's your customer service mortgage company, if you will. They are being encouraged to allow folks to go into a forbearance plan if you're impacted by the virus. So I've gotten a lot of calls. I actually have a little cheat sheet here to kind of reference. So I'm going to look at that real quick. So they've kind of got a loss mitigation waterfall, as it's called. And what I'm telling clients who are calling me, and what I'd love to share with everybody, is that ultimately it's your servicer that's going to give you direction on that. What's available, a lot depends on the type of loan that you have, but really what it is, it's a reduced or suspended mortgage payments for anywhere from 90 to 180 days. And then currently they're thinking they'll be able to extend it another 180 days if there's a need. So at the end of that period, that initial period, the situation, the employment, the income is going to be reassessed to see, does that homeowner still have a need to allow them to continue to defer what's normal. Now, what's really important to know is that this isn't payment forgiveness. Interest still accrues. You're still on the hook for paying back what you agreed to pay. It's just a way that you can get a deferment of those payments without penalty. So there's no late fees, there's no negative credit reporting. So the big thing really to know is a lot of this is being done on the honor system. In the past, with traditional loss mitigation practices, there was a lot of due diligence. You had to prove a lot of things. And these are really just affidavits that you're saying, hey, I was impacted and my family was impacted, or someone, you don't have to be sick. It just could involve your employer or your employment. So what we're really being encouraged to share is, if you don't need help, don't take it, or just pay as much as you can, even if it's just a reduced payment, because it will lighten the burden for you as everyone comes out of this crisis. So keep in touch with your servicer. They're going to be able to give you all the details on what's available in your particular situation.
So contact your mortgage, the
mortgage company.
Your mortgage check to.
Yep, exactly.
Okay. So just to kind of wrap this up, what's any expectations over the next week or two in the mortgage industry?
So the big thing that you and I talked about last time that was a departure from what was in the news is rates had really gone up quite a bit. So we're starting to see that settle down. The underlying forecast is that rates are going to remain very low for the extended period. This could be defined as 1, possibly 2 more years of very, very low rates. But in the shorter term, what we're all hoping to see is a continued realignment of the market conditions and the rates. So there was initially a real big spike in volume, and some lenders raised rates just to control that. And then there was other underlying issues that caused rates to spike up. And again, back to that volatility question you had earlier, we're starting to understand it a little more. So rates are settling back down and getting in line with what people expect, I believe.
Okay, well, awesome. All right, well, thank you for all that information. And if anybody wants to get a hold of you with mortgage questions, what's your phone number?
Best number for me is always my mobile, 770-656-9172. And we're on the web at my page is fairwayatl.com. Okay,
awesome. Well, thank you. And any questions for me out there, feel free to call me directly, 678-439-6699. And our website is petersonpartners.com. Peterson is spelled with all E's. hope everyone has a great week. And again, thanks, Jeff. And we'll talk to you probably again next week.
Much appreciated. Have a good one.
All right, you too. Thanks. Bye.